Hi, this is Joseph. It is December 31st, 2020. We're currently trading the New York session, and I want to show you a trade here. Initially, it gave us an entry on the point and figure. Before I go any further, though, please understand that this is not a trade recommendation. I'm not calling out a trade. I'm not calling out a buy or a sell here on the euro dollar. I'm just showing you exactly what I did this morning and how my trading system put me into the trade, and the tools and the strategies and the methodologies that I used to actually identify the trade so that I could get into the trade in the right direction here, because we're looking at the euro dollar on a 4-hour time frame, and it appears to be in an uptrend, obviously, since about the low down here is the 22nd, and then we have the overall low down here on the 21st. It's been in an uptrend for a little while here, and you can see that it tops out. So I'm going to review a couple of different things and show you how I use this trading system. I teach this in my trading course. It will show you a step-by-step. It's a step-by-step guide on how to do this. And once you master these methodologies, you'll be able to use this strategy and these methods on any market. I mean, crypto, commodities, stocks, Forex, indices, it doesn't matter. It's the same basic principles. And I'm going to talk to you about supply and demand here. That's one of the biggest challenges I think that I see with a lot of new or novice traders, is that they still can't identify on a chart. They don't know what to look for. They don't know how to find it. They don't know how to confirm it. They don't know how to find the different phases, and they don't understand the mechanics behind it, because that's really what it all comes down to, is the balance or the battle between supply and demand. So again, we're looking at the euro dollar. This is a 4-hour time frame. This is obviously a bar chart, and this bar right here, you can see, I'll go ahead and open this up. This bar really helped me set up most of what I was looking at initially. So right here with this bar that I have highlighted, you can see it right here. This actually showed a sign of no demand at that point. It's an up bar on a narrow range. Again, narrow range would be, the range is the low to the high. And we're also paying attention to volume. I'm going to bring my volume charts here in just a moment, and it's a quick and easy way to confirm that what I'm looking at is actually going to produce some kind of a reversal. And then from that point, I then look at my point and figure chart and wait for the entry. So I'll show you how that works. So again, here, bar chart, I can see that there was a clear resistance level here. There was a buying climax, an automatic reaction. We have a range of consolidation. I'm going to leave that resistance level in here so that it can show me as these up thrusts start to more or less fail. They're really not going very far. You get a close above the resistance level. You can identify with volume that it's not likely to go too far. It's just a matter of a few different tests before it starts to roll over, and then it drops back down again. Now, we're probably going to get multiple entries if this is going to continue in a downward direction. But again, I'm going to show you what I was doing here with my futures chart. So now what we're looking at is my futures chart. This is the euro futures, and this is, obviously, you see volume down here at the bottom. So I've got an average volume here, just underneath the price pane, and then I have a volume, a wave volume indicator down here at the bottom. So again, this is a 4-hour time frame. This is obviously a candle. What we were looking at just a moment ago was a bar chart. So again, here is that sign of no demand here. This is my confirmation right here, and then I get a bearish engulfing candle here. Sometimes these candle patterns, they will help just bring my attention to it. I don't trade off of the candle pattern itself. I need obviously much more confirmation than that. Again, I'm tracking, engaging, and measuring the signs of supply and demand, and looking for these turning points within these consolidation phases, whether it's distribution or accumulation. So again, here we've got an opportunity to try to sell it. Again, this brings my attention. Let me show you my point and figure chart. So from here, we're going to go over to the point and figure. So now we're looking at my point and figure chart. So this is how I set this trade up and where I got my opportunity to get into the trade. This paid approximately 48 pips on this trade, and it's not a bad trade. It certainly isn't like the trade from yesterday with the pound dollar, but the pound dollar was moving further. It was covering a greater distance. We all know that in order for us to profit and make more profits, we need price to cover a greater distance. Some currency pairs do that a lot better than other currency pairs. This one was moving relatively slow in a relatively smaller trading range, but nevertheless still a great trade opportunity. Now, this figure right here, this number, the target, the final target there at 1.2226, that's actually based on the amount of data that I have here and how I calculate this. So very often what we're looking for is uh, the market to create, there has to be a cause. There has to be a reason why price is about to break out of this range of consolidation, whether it be at support or at resistance. In this case, again, we're looking at an area of distribution and we're looking for a possible markdown phase. So if we go over here to this, let me bring it right around this range. So you can see how it's clearly creating this very solidified range of consolidation. This is exactly what I want to trade. This is what I'm looking for. I want to trade the breakout. I want to trade the confirmed turning point. And again, I showed you how I was looking at that with my bar chart initially, looking for signs of demand or no demand at that point, possibly using and incorporating the volume indicators so that I could identify that footprint and that turning point and identify when the smart money is about to make another move on this pair. I don't want to trade inside a consolidation like this. This is very often where a lot of novice or inexperienced traders will trade inside a consolidation, and it gets very choppy. They don't know how to read this. They don't know if it's actually, if they're looking at a breakout at a very specific time. So the point and figure charts gives me a very precise entry. I don't mess around trying to trade inside of these little ranges. You can see a few little signals, but if you know how to read the charts and the point and figure, you won't get in until you actually get a clear entry. So that's exactly what we're doing here. We don't mess around getting into a trade where we're going to hold on to the trade 18, 19, 20 hours. Occasionally that could happen if you misread the charts, but if you look at them correctly, and it was just very simple. We're just using volume as an indicator. I'm using the bar charts. I'm looking at the 4-hour, maybe the 1-hour time frame. You can slow things down if you're working full time. If you have a full-time job, this is going to give you an opportunity to slow things down by looking at a larger time frame, such as the 4-hour, as I was just a moment ago on the 4-hour bar chart, and then I was looking at the entry here on the point and figure chart. And so I just simply wait for my entry. I get in where I'm supposed to. I can then determine how long to hold on to the trade, because again, that's another one of the biggest challenges that most people experience. Where do you take profits? How do you know where to close out the trade? Because you could get into a trade that's, giving you some decent profits. And if you hold on to that trade too long because you don't know where to close the trade out, you could end up giving back all of those profits. I think everybody's done that at one point in time or another. I used to do that quite a bit in the beginning of my trading career until I learned how to incorporate point and figure, read volume, and to identify these turning points and stay out of the markets where I shouldn't be in it. Again, this is an area where I should not be into the trade. Some people like trading inside of the choppy ranges like this. I tend to see and notice over 20 years of my trading data and looking at all of my records and my trade records, I can see that where I usually experience the greatest amount of loss is inside a consolidation like this. So I don't mess around with it. I stay away from it. I wait until smart money is about to step in here and start driving price a lot lower. And you can clearly see as price gives me my entry, we get the entry at 74. This is 1.2274. There was actually a second entry, and I mention this because some of my coaching students, if they're sleeping, if they don't have their alarms set up correctly on their charts for whatever reason, life gets in the way sometimes of trading. You know what I mean? And you sometimes do get a second entry opportunity. And I mentioned before that if this is going to continue to move down a lot lower, we're probably going to get more opportunities to trade it. Let's roll this out a little bit, and you can see we get that testing phase out of the way, and then here's that testing phase that I'm talking about. It goes back up as high as 85, and then it turns around and comes back down again, and there is that really strong move. So you can see that smart money stepping in here at this point. You can see clearly the battle between supply and demand. We're using volume to confirm these turning points, and we just simply wait to get in where it's safe. It helps us to minimize our stop loss. We're not holding onto the trade too long, and then immediately we get that rush straight down. Again, the 26, the 1.2226 was a very precise measurement. I teach how to do this in my point and figure course. It's an online trading course. I teach you exactly how to set up your charts just like mine so that you can trade point and figure in different markets. There's different ways to construct these point and figure charts based on what you're trading. And then you want to be able to count based on the data here, these columns that will give you a clear, accurate reading as far as how far price is going to go. So again, the question is, how long do you hold on to the trade? Where do you take profits? Every single time we get a trade like this, we're always able to calculate how far price is going to go. Every single time. It doesn't matter if I'm using this for day trade purposes or if I'm using the point and figure on the larger time frame for, let's say, the daily or the weekly. I use them interchangeably. It depends on what my motive is and what my trading style is going to be for the day. Sometimes I'll day trade because I have more time. I can sit in front of the charts. Other times I can't sit and just day trade every minute by minute, hour by hour. So I slow things down, and you can do the same thing. I teach you exactly how to alternate your charts and switch them over so that you can trade off of the larger time frames, and then slow things down for yourself so that you can get into these trades and you don't have to worry about them. And what I mean by not worry about them is that basically we clearly know where our stops are and we clearly know where our targets are. And it's just a matter of letting the trade work. It's like that trade yesterday where there was 180 pips on the pound dollar. It was just a matter of letting it work as it continued to wave and move up to its expected take profit level. So again, these are very precise targets. You can see again 1.2226. It actually stopped right here. That low was 28, but if I go to the bar chart, you can see that it hit 26 and then stopped, pulled back up again, and then went down just a little bit lower just a few minutes ago, went down as low as 25 here. I'm going to teach you how to do this in my coaching course. I do weekly live coaching, so if you need any assistance, if you're getting stuck on anything, I'm always there. You can unmute your microphone during these coaching sessions and actually ask me questions. Again, once you learn these methods and these strategies, you're going to be able to trade any market you're interested in. And that's a really good I think it's a really good idea to have that ability, because I'll tell you that, and you've probably seen this yourself, sometimes Forex across the board goes into slight, tight ranges of consolidation. There really isn't a whole lot of opportunities. But if you were to look over, let's say at oil or gold or silver or Bitcoin or crypto or some other market, there could be a really explosive move there. And again, if you learn how to apply these methodologies, you can trade any market effectively, just like this. You're always going to know where your count is, meaning that you know where to take profits. You're always going to know where your stop loss is, and when to get into the trade is when the smart money is moving back into the markets, and you want to trade with them, not on the other side of that. Thanks for watching. I hope you had a good trading day.